Okay, welcome, David. David Lund, the hotel financial coach, all the way from over there in the US of A.
I,
But I've just learned that you're not from the US; you're a Canadian. So for all the viewers and listeners,
yes,
kind of,
I'm
kind
part.
of,
I'm part of the Commonwealth, really,
yeah, exactly.
but I live in
You're one of
America for the
us.
time being. Yes,
Exactly.
I'm one of you.
You're one of us, a Canadian. Lovely.
Yeah, yeah,
Okay. Well, I reached out to you because I've been tracking you on LinkedIn and tracking how you help hotels with their financial planning and measurement and that sort of thing. So, and we're as you know, we're doing the benchmarking over here in the UK, not only
Mhm.
for hotels but for venues as well as hotels. So we thought it'd be quite a good idea to sort of get a view from over the pond and see what your thoughts are. So before we start, tell us a bit about you and your background and how come you've arrived at where you are.
Yeah. Thanks. So I grew up in the shadow of the Algonquin Hotel in St. Andrews, New Brunswick, and I ended up going to hotel school. There's a local college there. My father was a teacher. And he came home one day, said, there's this new course. I think it's bartending or something, but it wasn't. It was hotel management. So I ended up attending that for a couple of years.
Course, so you,
And
you attended the wrong course.
yeah,
So you thought you'd be a
that's
bartender and you ended up being a financial consultant.
right. But I ended up actually being a bartender. Was the first, one of the first jobs I ever had in
Okay.
the hotel business. But I worked inside rooms and food and beverage for about 10 years. And then through a twist of fate, I ended up getting transferred to the accounting department inside of this company. And then I actually really excelled at that. So a few years later, I was the director of finance. I was the head person.
Wow.
And for the next 20 years or so, that's what I did, as well as a stint as a hotel manager
Okay.
and also a stint in our company's corporate office in Toronto. But basically, heavy experience in operational accounting is what we call it. So running the hotels, basically.
Mm. Okay.
Yeah. And then about 7 years ago, I left my company after 30 years, and I took a different path, and I started my own business, and I created the Hotel Financial Coach, and it's all about helping hotels and hoteliers with their financial knowledge and their expertise around understanding the business aspects of the hotel world.
Hmm.
There's a lot of people come up in our business and they are very experienced with service and with colleague engagement and operations, but all of a sudden they find themselves in a senior leadership role and someone expects them to do the budget and to manage the numbers, and they're lost. It's kind of a real niche that has been overlooked, I would say, largely in our industry. We don't train people on the numbers. It's kind of a secret club or a rite of passage, or hopefully you have a mentor. So that's kind of the role I play in my business, is to help individuals as well as hotels with workshops and mentoring.
But that seems a bit odd because most hotel these days, I say most hotels, a lot of hotels are owned by the finance houses, the private equity businesses. You know,
Yeah,
gone are not in total or not completely, but gone are the days of family run hoteliers and
yeah, largely. And you're
yeah,
right, it is odd, but it's just one of the things that kind of exists in our business. And we do have a lot of institutional owners, but they don't really get involved in how the hotel's managed. That's up to the brand typically. They hire the brand to do that. And, you know, it's just one of the things we don't do very well is train people financially.
that's odd,
Um,
isn't it? So
it is.
the pro,
It's a great,
pro
I believe there's a great opportunity because when you actually look at who pays, if we were to train everybody in our senior leadership team on the finances, the owner pays for all of that because the brand doesn't own the hotel. The brand mandates what programs the hotel participates in, from service or engagement or anything else, and
mm.
the owner pays for it. That's the relationship that the branded managed hotels have, not the franchise one, but the branded managed. Um, so the brand wouldn't have to pay for it anyways. The owner would be paying it, and
Yeah.
everybody would benefit. It's actually one of the things that I write about a lot, is that relationship.
Okay. And you're we're in venues which include hotels, but you're predominantly in hotels which don't. So your experience doesn't extend to venues, does it? Because I think
Correct. No.
the conversations we had before, that in the US, they don't really have event venues per se, because most of the event venues are hotels.
Yeah, the conference facilities and the hotels is typically where people would be meeting and gathering. And there are some, limited facilities, I would say, and some special use facilities, but predominantly, if you're going to a meeting or a convention or a gathering, you're going to a hotel.
And that includes product launches and
Yep.
company kickoffs and uh,
Yeah.
Christmas
Your
parties.
your typical full service hotel in North America is going to have a good deal of meeting space because that's a big segment of their business are groups. So we want them for their bedroom business, and we provide the space, we sell the space, we service the space, but we don't really make a lot of profit typically off of the convention end of things or the catering end of things. It's more of an amenity. We make the money from the bedrooms. So if you can bring your group of 400 delegates to my hotel for 3 days, I'm going to get 1,200 room nights at $300 a pop. You may spend $100,000 on food and beverage and meeting space and AV, and I will make probably some money off of that, but it's a slim margin compared to the rooms. The rooms is where the cream is.
Yeah, I think you said in a previous call that we had, you said that, and correct me on this one, 80% rooms should be driving 80% profit, gross profit.
Yeah, a really good rooms profit is 80%.
And M&E drives 20% gross profit.
Yeah, 20 to 40 in a good hotel. Some hotels actually lose money in food and beverage or meetings and events.
Okay. So that gives you the idea of, and again, I mentioned this in our last call about, we have a phrase, the sprat to catch the mackerel. So the M&E is the hook to get the beds, which is where the profit or the margins and the profit is.
Yeah. And, when I say 20 to 40% is a good margin, that's the way we account for it in the hotel world, which really means that if you were a standalone, you wouldn't be making those margins because we don't charge certain things to food and beverage or meetings and events because of the way the uniform system of accounts for the lodging industry works and dictates.
Right. Okay. So it could be then that the hotel gives away the meeting space.
Some of them do, especially on shoulder months and need periods. They will do just about anything to get those bedrooms.
Shoulder months meaning the leaner times.
Yeah. Typically the meetings and events are big in the spring and big in the fall. Mm-hmm. Not so much in the summer, not so much over December, January because of holidays and weather and all those things. But the big meeting and event months are the spring and the fall.
Okay. Typical. So do you, when you're advising your clients on financial management, do you spend much time diving into the M&E side of things, or do you focus predominantly on the beds?
Well, what I would be working with them on is how they report on that information and how they're looking at it. Because with a good financial reporting system in the hotel world, we can glean a lot from what's going on in the meeting and events world and organize it in such a way that we can become more profitable by analyzing it and finding where we're weak. But a lot of hotel companies have terrible financial statements and it's all kind of muddled together and they're not using some of the tools that are readily available to them if they were to incorporate them. Things like, putting productivity into their financial statements, putting flow through into their financial statements, putting statistics into their financial statements. All those things are right at their fingertips, but a lot of hotel companies don't use them.
Explain flow through.
So flow through is simply comparing one period to another. And let's say that this is probably not a good example right now, but let's imagine just for a minute that the sales in the month of July were $200,000 more than they were the same month last year. So flow through would measure how much of that additional revenue ended up as profit. And typically we want at least 50% of it to go through as profit, but we could easily spend the entire $200,000 on, food cost, extra labor, promotions, expenses, And that's not good management. We want to, take advantage of that additional revenue and deliver it to the bottom line. So that's measuring flow through. And you can do it on just about any area of the business. I produced an article. I called it the 21-point flow through inspection. And you can actually boil it down to that kind of granular level and see exactly where the money comes from, but also where does it go. It's really important.
And so that means and needs the operators to have good execs putting the data in the right places, using the systems correctly, well trained, disciplined.
Yeah, we have one big advantage asset in our hotel world, I believe, and it's called the Uniform System of Accounts for the Lodging Industry.
Yeah.
And it's a book that it's in its 11th edition. It's been published for over 100 years. And it basically tells the hotel world how to create financial statements and what goes where, what expenses, what payroll, so that we all report things uniformly. And without that, we're lost. And it's interesting because probably half of our industry uses it. The other half has no idea that it exists. So I see all kinds of financial statements where things are just all over the place. And one of the things that I get hired for a lot is to help hotel companies move in the direction of the uniform system of accounts so that they can start comparing apples to apples.
Okay. Well, that sounds familiar, because in the events industry, which is the one that I'm predominantly involved in, which includes hotels, but in the events industry, there is no equivalent of the uniform system of accounts. So everybody's doing their own thing. I mean, even in the hotels world, most hotels use a common system, usually Delphi or what's the other one? There's another one, Oracle.
Opera.
Yeah, exactly. Opera from Oracle or Delphi.
Yeah, those are some of the bigger players. There's a lot of different systems, but yeah. And that's okay. They can use all those different systems. So when it's really, what's really important is when they get to the financial statements. That's how we want to organize things in such a way that apples are apples and oranges are oranges.
Yeah. Okay. Yeah. So you start off by getting their data sets in order and making sure that they're comparing the right things. So you can run reports, right? You
want everyone to put, travel agent commissions in the rooms department. You want everyone to put cable TV costs in the rooms department, not in maintenance. You want everyone to put security labor in A&G, not in the rooms department, not in maintenance, and on and on and on. And that in itself is a challenge, but once we kind of get that working to a reasonable degree of efficiency, we can really then start comparing results.
And you presumably use the STR benchmarking for your clients, or your clients are probably already using it. But
yeah, it's
a big part of your programs.
Well, not so much mine, but a big part of the hotel world is measuring RevPAR index, and the company STR, or we call it STAR. They are the kings when it comes to propagating that, and they do a very good job of supplying hotels that are in your competitive set, your comp set, with RevPAR index information, and basically tells you how well you're doing relative to your competition, but it only tells you how well you're doing relative to your competition as far as room revenue goes. That's it. So RevPAR stands for revenue per available room. And it's one of the key measurements in the hotel world to show you how you're doing relative to your competition. Having a positive index of over 100% is really what we're striving for. And what that means then is if there's 5 hotels in our comp set, we're the 6th one, we're actually stealing share, which is very good. But it falls far short of actually showing you anything about profitability. There's another measurement that's really important that's getting more attention, and it's GOP PAR. gross operating profit per available room. So that's sort of the bottom line almost. It's what we call the manager's number, GOP. But it would, if we had that same measurement for those 5 or 6 hotels, then we would really have a powerful answer to how well we manage the hotel. Because it's one thing to drive the top line, it's another thing to drive the bottom line.
Yeah, well,
Both really well.
There's a company we work with in the well, I say we work with, we've got relationships with, and they're called HotStats, and they do profit. So they don't, and the STR reminds me of a golfing analogy of driving for show and putting for dough.
Yes,
it's a vanity number. It's a vanity number. So
it is very much.
And is that the same kind of? Would you say that the STR, although it's big and it's dominant, it's not really what you want to be focusing on? You want the GOPAR number.
Well, you want both. Because if I own the hotel and I hire you to manage it, I want you to, you tell me you have an effective sales and marketing teams and strategies. I want you to prove that. So you prove that by giving me a good index. Mm-hmm. Means you're stealing more business. But like HotStats is working to flush out, is the profit's really what's important at the end of the day. And especially now, especially with what we've been through, you just need to look at the hotel industry in the last 10 years, and our GOP has been going up in most years by double digits. And everybody's, been doing very well. Like they say, high tide floats all boats. But now with, the current situation and our world is a different place, profitability is what's really important. And being able to say, I can run your hotel and get you a better bottom line than the other management companies on the street. That's a really important thing to be able to prove to owners. So right now they can't prove it, but HotStats has their programs really focused on measuring all kinds of different performance indicators, including GOP per available room. And I believe that is the future of our businesses, having that be the key metric that gets me those management contracts.
Okay, so and do you have any examples of hotels or groups of hotels that have used your disciplined approach and have gone from strength to strength? I don't want to I don't want you to give away any secrets or anything.
No, I mean the best example I can give is my old day job. I did a stint in our corporate office in Toronto, and I did benchmarking for 2 or 3 years, and I created a whole program around. Here's the book that I produced every quarter. This is from 2006, but it's called a Comparative Benchmark Improvement Report. And so basically what we did, I actually have a memo here that I circulated with that report in 2006. But basically what we did is we divided the data into 4 different types. High level, like GOP, EBITDA, pricing, productivity, and costs. So we're looking at all the different main metrics of our business. And then we organized the data from there into zones. So we had US hotels, city center, resorts, et cetera, et cetera. And then we broke it down so that we're always comparing the hotels to the entire group of hotels, but also to themselves, so that we can see their improvement from one quarter to the next, or their slippage from one quarter to the next. And the whole idea was to be able to analyze the information and find out who is doing really well and why, and who is doing really well or really poorly on a measurement and why. And to be able to bring those outliers closer to the center, or to get hotels to be more proficient in certain areas. So something like electricity per room available would be a good one. Why do we have such a wide variance? And there are a lot of obvious reasons, and we can break it down per 100 room available so that we can compare big hotels to small hotels. But we found things like, and this was in 2006, so just when it was starting to happen, but some of the hotels that were getting better results, they already had, the light bulb replacement programs that we commonly see now that everybody has, moving from incandescent to the more efficient light bulbs, things like that. Also hotels that had newer energy facilities and better chillers. These things all cost, big dollars, but at the end of the day, they drive results. So as a management company, we help the owners see that there's opportunities for them to invest in areas of their business that's really going to help drive profitability. So that would be one area. And then another key area is just the pure operational results and the productivity. So we can boil it down so that I can tell you how many hours per room occupied it takes to run the housekeeping department at every single one of my hotels. When you think about it, they're all doing the same thing. They're cleaning the rooms, they're cleaning the hallways, they're cleaning the lobbies. So if I'm organizing my data consistently in all those hotels, I have a really powerful tool to look at who's the most efficient and who's the least, and to learn from that. How are they organizing themselves to be so efficient? And quite literally, we would take one measurement every quarter and focus on what are the top hotels doing. And we would have conference calls. We would share best ideas on driving better results on that one key business indicator. And it's a wonderful program if people focus on it and it's embraced.
One of the examples I've heard of that level of detail and that level of focus, which you've just described, and the benchmarking that we produce is, there are no answers. That's the thing that we're not trying to educate our users, but we don't tell you where, we don't give you the answers, but we tell you where to look. Mm-hmm. And an example of that was a hotel that I heard about, and they did exactly what you've just described, which is to dive into, and it was actually the room service from the maids or the service people. And what they found by going into real detail was on certain days they were really efficient and they were getting more done and fewer hours, and the costs would fluctuate, and therefore the profitability would go up. And what they found was that there were two people who worked together that were just particularly good and efficient at turning over a room or turning round a room. And so they observed them, they put cameras on them, they observed them, and they used those cameras and those two individuals to train everybody else. And the cost went down, the profit went up. And it's something as simple as that. But how the heck you're never going to know that stuff unless you know where to look in the first place.
There's a popular saying in businesses, and I think it's an economist. I think I'll say his name. Hopefully it's right. It's Peter Drucker, and he said, "You cannot manage what you cannot measure." So all we're doing with benchmarking really is really respecting that idea. And we're starting to measure, and then the management part comes afterwards. And you're right, just because we have a bunch of numbers on a page doesn't mean anything. We need to dig into them and figure out what's going on. And just like your example, we found someone who was doing something really well. Well, in the management world, that's gold. That's currency. Because we can, if one hotel can do it, we can train all the others to do it. Absolutely. They might not do it exactly as well, but maybe they'll get 20% better instead of 50%. Well, that's a pretty big improvement.
Yeah. So you can share that information within a group or within a hotel or within a certain brand of hotel groups. And do you see the appetite in the US in hotels to share that learning, to share that information through benchmarking? I mean, when does it stop, and when do they try and hang on to that IP, as it were?
Yeah, I definitely think there's interest at a certain level, but in the hotel business, we have a big obstacle in that most hotel companies are management companies, and they don't own the hotels. Somebody else owns them. They manage them for those operators, for those owners. So the question is, who pays for all of this analysis? And typically what that would mean is that it falls on the head office payroll of the management company, and that's a no-no. We don't want to be adding overhead. So typically in the hotel world, if something works really well, it's because the owner's paying for it. So a good example would be, like, especially in the past, we had great reservation systems. Well, the cost of that reservation system was passed on to the owner as part of the management agreement, and it allows the hotel management company to keep it functioning at a very high level because the owners are actually paying for it. But with a benchmarking system, no such facility exists, or to date exists, to charge that back to the owners. Now, I'm not saying the owners wouldn't want to pay for it, wouldn't want to see value in it, but it's just not something that's been created along the lines of, the central reservation system as an example.
Have the central reservation systems and the Oracles and the Delphis of this world, have they attempted to get into the benchmarking?
No.
No. Is that not something that they see as part of their service package?
Yeah, again, it's overhead for the management company, payroll on their head office that they probably don't see immediate value in because they can't charge that to the owners as a service.
Yeah.
As a management company, our whole game is to make programs that are desirable for owners that we can sell them. We sell services.
So if I'm a venue or a hotel and I'm just at the beginning of the journey of applying better financial management, where do I start? Obviously, in the US, it's hiring a guy like you, but just broadly speaking, where'd you begin?
Just comparing one key number would be a good place to start. So let's compare GOP, gross operating profit. Let's compare the percentages across our brand. Let's say we have 40 hotels. What's everybody's GOP percentage? How much is it per key or per room available? And then why? And then from there, we can start. But it's all about, like with Star, they just compare one number. That's all.
Yeah.
RevPAR index.
Yeah.
And it's a gold mine because it's so important. But, measuring performance at different levels is also very important, very insightful. But for a company, they just really need to start to pick one thing and then ask themselves why. And then from there, they're going to get a lot of data, a lot of answers, a lot of noise. Then they have to start filtering it and go, okay, well, it's great that we now know the GOP per hotel. Let's look at the rooms profit. Let's look at the overhead costs. And then we start to see different pictures emerge. Let's look at the pricing. Let's look at the efficiencies. Let's look at the labor. And then from there, let's start to look at what are best practices. And you do need to get down into the ditches and the trenches, but all the information is there to be able to drive those kind of answers. So the question then really becomes, how do we pay for this? And how do we get it to become part of our fabric of our business? And what I would say is that if you're a management company, you just really need to put financial reporting at the heart of what you do. And your owners will see the value in that. Not everybody will, but a lot of them will, and they'll come to you. So if I was a management company, hotel management company, and I have a great financial reporting system and I can drive better results and I can prove it, then that's an incredibly valuable tool for me to have. So that's what I would do if I owned a management company, or if I was the president of one of these brands. I would make that my pet project for the next 10 years and really dig in. And I think you would see your ability to capture more of the available business out there for your brand than your competitors. And that's really what it's all about. And our world is completely flipped upside down. So in the past decade, it was all about driving RevPAR. Now it's going to be, I believe, about driving profits. So companies like HotStats that already have all that information kind of at their fingertips, they want hotels to report in so that they can then drive this information back to owners and management companies. So maybe I don't even need to do it myself. Maybe I just need to really incorporate program like HotStats or like theirs to be able to drive that information inside of my company.
Mm, mm,
So it's really what STR was able to do, because back in the day before STR was popular, we all collected the information ourselves vis-a-vis the call around. And that kind of compares to what I used to do inside of my company, which was collect all the information myself. But if somebody's providing a service and we all use the accounting system the same way, then why wouldn't I just buy it from them and be able to rely on that information? I think I just gave them a really good plug, by the way.
Who gave who a really good plug? HotStats.
HotStats.
Well, it makes, but yeah, well, that's only because you're an independent operator who is thinking about the customer, and the customer wants to know, especially now, about profitability and the vanity number of RevPAR. It may have been okay in the high tide times when everybody was floating way above the line, but actually now things are getting a bit tight. And we're seeing it in the UK. There's a lot of in our case, there's a lot of venues that had contracts bid for them. The management companies had bid for the contracts, won the contract, and now they're really struggling because the margins are too tight. And actually, when there's a bit of a dodgy tide, I don't know where I'm going with that one, but when things get a little bit rougher, then obviously the profitability takes a hit and everybody loses, and it can sink it. We're seeing a lot of sunken ships at the moment. So I think it's almost Darwinian, isn't it? The world has a habit of these cycles where things are, whether it's a forest fire where things are flushed out, recession. Everybody talks about a recession being a good way for innovation to come up and for the old guard that's got a bit fat and got a bit kind of lazy to go away. So, not that anybody would wish the current COVID situation on anybody, but out of it probably should come some sharper focus on some of the core financial fundamentals, and then they'll need guidance as to, because they'll need to upskill into doing that fairly quickly, won't they? Because that won't be in, as you said, it won't be in their DNA, it won't be in their culture to pour over the numbers every single month. Look at the top line number, the revenue numbers, great.
Well, fundamentally, I believe there needs to be kind of a change of focus because, and I say this a bit tongue in cheek, but hotel management companies make their money off the top line. They make 99% of their money off the top line because they charge management fees based on gross income or room revenue. And all of the other fees typically come off of some metric of income or volume. So at the end of the day, if you're one of the owners of one of my hotels and I manage it for you, and again, this is a bit tongue in cheek, but I really don't care if you make any profit. I just care if you drive a great top line and then provide great service and everything inside of that. At the end of the day, if you make a little bit of money, that's great. But my focus isn't really on driving your bottom line. It's on driving your top line. And that's what needs to change. Management companies need to put just as much focus on driving the bottom line and be able to prove it. Put their money where their mouth is, basically.
Well, I think it's the profitability element is going to kick in strong. Having said that, I also think that there's going to be a rush for revenue as well, because there's lots of empty hotels, there's lots of empty beds, there's lots of empty event venues, and all they're going to want to do is just put money in the top to get the wheels going again, to get the systems going again. And so my fear is that profitability might just be something that comes tomorrow rather than today. I don't know.
I think for most of them, you're absolutely right. But I think the smart ones, the ones that see that there's a new frontier that's in front of us that's possible, will see the ability to put profit as part of the formula and be able to stand behind it. And then I think you'll see things start to change because not everybody's chasing revenue. the ones that are able to prove they're better at managing the hotel will actually have something they can use as proof. Whereas in the past it was very fragmented, and you couldn't really compare yourself to another hotel or another set of hotels. I can remember trying to figure that out inside of the company I worked in, and it was very challenging from a data point of view. But again, with something like HotStats, it's all there. So as long as those hotels that are in my RevPAR comp set are reporting into HotStats, into their financial metrics, I then get a picture of how well I'm doing. And it's powerful when I look at my RevPAR index and it says I'm 5 out of 6 in my comp set, I'm going to hold my head really low. It's awful. But if I can say I'm number 1 or number 2 in my comp set, I'm smiling. I'm doing a great job. We should be able to do the same with profitability. And then we're going to separate the men from the boys, or the girls from the ladies, or the women. Not to pigeon-toe myself, but that's really, I believe, the next frontier for the hotel business, is to be able to do that. And I think some other people do too, because they've been busy building these tools, and it's about time.
I think it's going to be the shape of the recession that we are in, that was quite inevitable. If it's a V shape, we're going to go from cost cutting and profitability. We're going to go into land grab pretty quickly. I mean, I read an article the other day that I think, was it Hilton, or was it? Yeah, I think it was Hilton. During the COVID, had invested in 188,000 bedrooms in terms of property development. So they're clearly seeing the long-term future is good enough for them to invest now. If it's a short-term bounce, if it's a V-shaped recession, then there's going to be a lot of people that come out of it very quickly, and then the smarter ones that can prove that they can come out of it quicker through better management and better returns, because they've got better financial fiscal management, are going to be the ones that can pick up pace and grow quicker. That's what it's going to be about, really, isn't it? Because everybody's going to grow, because everything is going to get back to normal, and we're going to more revenue, more people travel, and more beds and more conference rooms, and that's going to happen. But actually, the ones that are really smart will be able to hit the turbo boosters and win more management contracts and open more properties and get bigger quicker.
Well, that's definitely the game in the hotel management world, is getting more customers and more revenue, because again, we make our money off the top line.
Yeah.
But I also believe that now, with what's happened, and you use the word V's, to me, the V is vaccine. We need the vaccine so we can get the recovery happening. But when we do, I think that out of this will emerge a greater discipline when it comes to profitability. Well,
okay. So that was going to be my wrap-up question then. So what's your, it's a crazy question, because what the hell do you know and what do I know? But what's your prediction? Apart from the vaccine, what's your prediction? Because it's all based on travel, really, isn't it? That's the key factor.
I think that the last thing that's going to come back is going to be international travel and group business. Those are the two things that are going to be the hardest.
First to shut, last to open.
People don't want to get on planes, and people don't want to be sitting next to somebody in a meeting because we still want a social distance, and we until we have a vaccine, and until everybody's taken it and we've got the herd immunity around the world, and this thing is a thing of the past, I think people will travel and will go to hotels, but it's going to be more regional. It's going to be more leisure. It's going to be drive market. So how long does that take to get, the vaccine and the herd immunity? I don't know. It's probably going to take a year or two at least before we're kind of back to where we were in 17, 18, 19. Who knows?
So do you see a gradual increase, as in, do you think it would just, the events will get bigger? Just the economy might be a V shape, but in terms of our sector.
Well, like right now, people are traveling. People are, you can go to your local hotel and you can sit by the pool and you can go golfing and you can get some takeout food and you can even go to some restaurants that have half the seating that the other ones do. And that's different kind of in every locale. But, to get to the point where we're going to events where there's lots of people, I think we're a long ways away from that. So that's the meetings and events business 100%. That is that's half the people sitting on airplanes, a lot of the time are people going to big events, concerts, symposiums, all those things. So I think those will be the two things that take the longest to come back. And that's a big chunk of our business, especially the higher end hotels with the big meeting facilities. Your little hotel that's a limited service hotel that has 60 rooms and, they might be back to normal this fall if we don't have a big spike in things. And again, it really depends on their location. But if I've got 100,000 square feet of meeting space and I typically fill my hotel in those spring and fall months with groups, I've got a big problem.
Well, that goes for venues. It goes for the big venues as well as so the smaller venues will probably win out in the short term, domestic market almost certainly, and local market.
Well, what's going on in the UK right now? Are there any events?
No. Well, yes, very tiny ones, but events can come back at the 1st of October.
Okay.
So we're running some pilot events, and if they work successfully, then, and presumably through track and trace, then we can switch on confidently at the beginning of October if the venue is operating at a protocol. But the guidance is still quite loose with regards to size. So at the moment it's up to 30. So whether that flips to 50 or 100 in October with protocol, space protocol and what have you, who knows? But I think we're all crossing our fingers that October the 1st is the kickoff in terms of when things will start.
Yeah.
In earnest. Tiny smaller events are happening now, but not any significant number. So I think it's going to be October. And then, of course, the Christmas party season, which for the events industry in the UK is a huge deal.
Yeah.
I mean, I can't see that happening at all this year because that's the worst of the worst, isn't it? I mean, talking of getting close to each other, a few glasses of beer at the Christmas party, and all of a sudden
we're all going to get sick.
We're all going to get sick.
We're going to have Zoom. We're going to have a Zoom Christmas party.
Zoom Christmas. Oh, sheepers.
But that's something I think that we really need to look at as well. Is that the whole world's been forced to do this, and it's kind of working okay. Technology's kind of has met the moment here. Because we're all meeting on Zoom or whatever device you use, and it's kind of working. So, I talked to a guy this week who works for a big brand, and he said, I've had 4 board meetings in the last 5 months, and they're all on Zoom, and I never thought that would happen. But David, I don't think I'll be getting on an airplane ever again to go to a board meeting. Why would we? This works. And it's actually better in a lot of ways. Saves so much money and time. And he's right. And so unless there's a real compelling reason for us to get together, I think this is going to be the way a lot of companies choose to do things. And they'll never be getting away from certain things like trade shows and, the need to actually see and touch something, experience something. But if it's simply you and I exchanging ideas and checking off our list of things that we need to discuss and agree on and vote on and whatever it is, why would we get on an airplane?
Well, I think you're right. I do think that the landscape and the dynamic has changed, and in some cases it's changed for good. But I think I think events will come back. I think they'll come back as strongly as they have done in the
Hope you're
past.
right.
Uh, but I don't. But I think they'll be different. I think the reasons will be different. If it's functional, if it's functional and kind of productivity based, and we just need to meet to check some things and to agree things and sign board meeting minutes or whatever. That recording can go on the file next to the board meeting minutes that where we all voted and stuck our hands in the air or whatever. That can change. I definitely think that can change. But it also, this whole conversation moves into what does the office environment look like? And I think that the office environment is going to shift along with events. And events are going to be when there's big announcements. I think when there's going to be sharing that's needed, ideas. I think, generating ideas, people coming together to brainstorm or to be creative. If it's going to be to get stuff done and to be productive, then I don't think that's going to be a need for there. But I think that events will be really strong for, as you say, trade shows, for launches. But I think what will happen is in previous years or pre-COVID, you'd have 1,000 people attend your event and everybody else would be shut out. I still think those 1,000 people will attend the event, but they will be very, very high value individuals. They'll be proper VIPs. And I think that the brands will invest even more in those VIPs to give them an on-site face-to-face experience. And that face-to-face experience will be like nothing ever before. But instead of it being locked into 1,000 people spread across a whole range of category type in terms of customer or databases, I think it'll be a VIP experience. And then I think you'll have another 5,000 people who can experience it online. So I think events will be a catalyst for communication and experience, but the online will be in addition to rather than instead of. But I do think there'll be a slight change of emphasis with regards to what type of people and who do we invite into the room.
Yeah.
So I think it's going to be quite exciting. I think it's going to be really exciting. But I think digital is going to fly. It's absolutely going to fly.
I think a certain aspect may emerge as well, and that's this sort of idea that, and I experienced this myself, and I know millions of other people have as well. But when you first got a job where it included some travel and you were going places, you thought that was pretty cool, and you thought that I've finally come of age, or it's my turn, right? The feeling. But you know what it felt like after 3 or 4 years, or 5 years, 10 years, you're like, oh, I can't stand this. People that live on airplanes and fly around and go to all these things. I really think now, the executive with the good job is going to be the one who can stay home.
Yeah, I think there's been some research done that the home worker or the person that can work more from home is the more senior person. So I think the more senior you get, the less you have to travel, which, as you just said, used to be the opposite.
Yeah.
Yeah, but I just think,
or they pick and choose a lot more. And why would I want to go to Seattle tomorrow for a meeting that's going to last 3 hours and spend 12 hours on a plane each way and cars and hotel rooms when I can do it from here?
Yeah, I agree with that. But I mean, we don't want to go too deep into the weeds on this one. But I also think that if you're a brand and you want to do an annual customer get together, for example, I think you will spend a lot of money on it still, and you'll pick and choose your customers a lot more. Yep. You'll be very careful. You'll give them a better experience face to face. That will be richer. But you won't exclude your other customers who can, watch bits of it, online or whatever it may be.
Maybe we'll all be flying up front in the plane where there's at least 4 feet between the other person, right?
Yeah, exactly.
That would be okay. I could, sign on to that. But
yeah. Okay. All right, David. It's been great. Thank you very much for your time. We should check in and do these maybe every quarter is a bit too short, but maybe every 6 months to see how the tide is using your sailing analogy, how the
The
tide
tide. Yeah,
is
and good luck on your, your business and organizing that world. And
yeah,
you know, I
it's
wish you
going
well,
well.
and I think it's a noble cause.
Yeah, well, it is going well, and the venues are all beginning to realize that they need that extra insight into the market and the competition. So, I mean, they've always had it, but they now realize that now they can have it in more granular detail. Then, yeah, we're seeing them the uptick there pretty good. So we're quite
That's
excited.
great,
David.
David.
So if I'm a venue or if I'm a hotel, and I like what I hear, and I could do with some of your guidance and leadership when it comes to financial management, even if it's only just to start the ball rolling. How do I get hold of you? You're in the States, right? But
Yeah, probably the best thing for people to do is to go to my website,
okay,
hotelfinancialcoach.com, one word.
yeah,
And in there, there's a link to, book a call with me. So there's also my phone number, my email address. It's all there, but it's probably best to go to my website. And yeah, I'd be happy to talk with any of your listeners or followers about how I can help them, or, benchmarking or anything in the financial leadership world, and helping them with their teams and their leaders become more financially astute. Absolutely.
okay.
Appreciate that.
And do you have any kind of downloads, or do you have
Yeah,
anything that we can
I
get hold
do.
of?
Yeah, if you go to my website, I give away a guidebook, The 7 Secrets to Creating a Financially Engaged Leadership Team in Your Hotel.
Okay,
So you can get that with your email address, and I don't share that with anybody. And then you'll get my weekly blog. I write a weekly blog on all things financial in hotels. Lots of great information, also stories from my career and things I've done. And I've got a pretty good following, and I've been publishing for over 4 years now, every week. So sign up for that. I also give away tools like flow through cheat sheets and stuff like that. And you'll find a list in several places, but just send me an email. It'd be my pleasure to personally send those to any of your listeners.
perfect. That'd be amazing. Thank you.
Yeah. Thank you.
Okay. Well, look, thanks for your time, and we'll catch up soon.
All right. Thanks,
Alrighty.
Peter.
Thanks.
Cheers.